Good morning, everyone. As we see people coming in gradually, let me just quickly introduce myself. I'm Deepak, and I'm going to be the moderator for this episode of HyperInsights. This is the third episode that we're doing, and we're very happy to have with us Karan, who is the CTO of Kissht. Karan, thank you so much for taking out time to be here with us.
Hey, hi, thanks, Deepak. Very happy to be here.
So, Karan, because most of our audience is concentrated from the fintech and lending industry, I hardly think you need an introduction, but we will spend some time to introduce you. I will also quickly introduce our co-founder Kedar from HyperVerge. Hi, Kedar. How are you?
Hi, Deepak. Good morning.
Good morning. So, as I see, we have around 30 people in the meeting. Right? So, try to keep this session as valuable as possible for the people who attend. So, every episode, we make it a point to circulate this poll at the beginning, where our audience members can indicate which questions that they are most interested in getting answered. So, the poll is live right now for all of you to take. And please indicate which question you are thinking most about and you would want Karan to address. In the meantime, while all of you take this poll, I think we can quickly go over for a quick introduction of Kissht and HyperVerge for all those who don't know. So, Karan, I'm going to quickly present my screen and just beam a short presentation about Kissht and HyperVerge. So I'll let you start as I just share my screen. Can you see my screen, Karan?
Yes.
Over to you, Karan.
Hey, hi everyone. Good morning to everyone. I hope everyone is safe right now. So I'll just give you a very quick background of Kissht, run you through what we have done. So Kissht is basically a digital company. We originally started as the idea of Kissht was to bring the EMI products to the online e-commerce marketplace. When we started, there was Bajaj Finserv in the physical world, but we wanted to take that same experience onto the e-commerce world. So we started as a purely digital fintech, allowing customers to get the option of making their purchases through EMI. The thesis behind Kissht has been we wanted to bring credit in the digital world and also bring it to a very, very large part of India. So we also wanted to allow access to credit for new to credit customers. Over the past 4 years, we've completed the entire spectrum. We started as an online only company. We are now catering to online e-commerce players like Flipkart, Myntra, MakeMyTrip. We have also entered into the physical retail world a few years ago. And we are now able to cover a very large part of the Indian retail store also, where we are present in a scan and pay model, where a customer can walk into a store and buy a product through just scanning it on the app itself. One of the things that differentiates Kissht and has differentiated from the beginning is we've invested very heavily in our tech stack. We have used tech as an enabler, as a differentiator, and has allowed us to really bring processes to across India that allow customers from anywhere in India to get access to credit. One of the other things which is very different in Kissht is a hybrid online-offline model, on-book, off-book model, where we are lending from our own NBFC as well, and we are able to lend from partners like Kotak Bank, Federal Bank, and others as well. Just very quickly, as a range of bouquet of products that we have out in the market, we are partnered with online partners like Samsung and Carrot Lane. We have co-branded products. A lot of you might have used these products. The cardless credit for Flipkart and Myntra, the buy now pay later product for Flipkart, the trip money product on MakeMyTrip, they're all co-branded products jointly developed with Kissht. We are present in thousands of retail stores in the physical world. We also have a franchisee network where in tier 2, tier 3 cities, customers can walk into a franchisee outlet, do a very digital workflow with one of our franchisee partners and get an instant personal loan. And over the last 1 year, I would say we've also forayed into a B2C model where we've been able to service a lot of customers coming directly to our app and our website. Just very quickly, one of the things that we've done and continue to do so at Kissht is we keep using technology to bring an amazing customer experience. at the same time making sure that we are fully compliant with all governmental policies. And we've ensured that our process is honest to goodness digital, where we don't want paper, we don't want any physical contact, and we want to be able to do all of that while still being 100% compliant with whatever norms are around KYC and all that. So we've invested a lot in our technology. Just some highlight points are we've built our entire tech stack as a modern tech stack, which resembles a web application rather than a banking application. The switch that has happened in India in the last couple of years, where a large portion of the market has now access to smartphones and good 4G internet, we have actually pivoted our entire tech stack to become Android first. Our customer experiences now, and when I say Android, I actually mean Android plus iOS. But the reality in India is 98% Android, 2% iOS. So for us, Android does become the first option. But all of our customer facing products as well as our internal products, our collections is run completely on an Android app. Our sales, our in-house inward applications are all Android based, and we've put in a lot of effort to make sure that we use Android as a differentiator and as an ease of use. We've been at the forefront of using whatever India stack has brought to the table. With Aadhaar, we used to have eKYC earlier, but now that has gotten replaced with OKYC. UPI, the India tech stack, including Nash and all of the other products that NPCI and CCI have brought to us, we have actually leveraged it to the fullest possible. Guys, that is it from my side. I will give it over to Deepak.
Thank you, Karan. Kedar, it's your turn now to quickly give an introduction about HyperVerge.
Yes, Deepak, as soon as you load the presentation, I start.
Yes. Can you see?
Yeah. So HyperVerge is a team started out of IIT Madras. All students at IIT Madras. We used to be a research group representing IIT Madras and India in robotics. And over a period of time started working on real world problems, worked with a lot of industries in India. Around 2014 is when we got funded in US. We had to start a HyperVerge in Bay Area, and we set up an office in Bangalore, and we started looking at problems where there are massive number of images. Fast forward to today, Deepak, if we can move to the next slide. We have two businesses. We have banking and financial services, which is relevant in today's discussion, and we also have a geospatial business, which is satellite and drone imagery. In banking and financial services plus satellite business, we are getting an echo. So the one thing that we enable, the hallmark product of HyperVerge is its digital AI stack. Last year, we enabled 280 million KYC checks. This is about 4% of the world's population, about 21% of India's population. This could happen because of the partners that supported us through this journey. We work with Vodafone, Jio, Idea, telecom space. In the financial services space, we work with traditional lenders such as Bajaj Finserv, Aditya Birla, Fullerton, DMI. Work with all the digital lenders, leading digital lenders, etc. So the other part of our business is a geospatial business where we work with US Defense, we work with Airbus, where we look at large amount of geospatial data and we find out changes that are happening, sensitive changes that are happening, etc. So these are the two businesses. In financial services, the products HyperVerge has cover the entire stack. We are bringing this slowly and steadily to India. If Deepak, you can just quickly show the stack that we have. So we have a stack around KYC, fraud check, underwriting, collections. And we look to be the AI platform, like you choose, AWS or Azure for your cloud. This is we are looking to build an AI layer that helps you through different parts of the customer journey. So that's the quick intro for HyperVerge, and we can start.
Great. Thank you so much, Kedar. As I like to tell my marketing team that once we are done with the intros, the webinar has to stop becoming promotional and has to start creating value for the audience. Um, so at this point, I would like to point out that our audience has taken the poll that we floated. And if most of you can see the results, what the audience today is most interested in for this session is for Karan to dive deeper into the use of AI in fintech. So Karan, we've seen you speak a lot about adopting AI across your stack. And this has enabled Kissht to process first-time customers in less than 60 seconds, repeat customer in less than 2 seconds. So I'm sure there is a lot of AI that is being involved behind the scenes. If you could throw some light on that and also tell the audience what it is that makes Kissht an AI-first company.
Right. It's actually a question that is very near and dear to me. So let me just tell you how we've gone about AI. When we started the company, when we started Kissht, only single place where we were using AI was in our credit engine, where we were just using a model to decide whether customers can be accepted or not, or can be given a loan to or not. And that the reason that was the case where we are using AI only in one place was obviously it is not that trivial to get it right. And in a lot of cases, at a given volume, it might even not be necessary. Now, our promise of having a very digital experience and a very seamless experience for the scale that we are playing at today, it's simply not possible without using machine learning, using computer vision, and using some form of artificial intelligence across every single process. What we've done is we've looked at every individual piece in the Kissht tech stack and seen where we can use AI to truly benefit the customer, to reduce our operational overheads, and usually to reduce TAT for the customer. So there are several places within our tech stack where AI is, I can call it sprinkled, but it's actually a much more complicated thought-through process than that. One is obviously our credit engine and our fraud engine. They both use AI independently, and that is where some of our largest work in AI has gone. That has reaped rewards of a different magnitude. So that is one of the biggest differentiating factor that leads to a much lower NPA for us. That leads to a more streamlined collections effort. We are able to do business more confidently. That is one place where we have truly used AI. Another place where we use it is in the computer vision capabilities. And now a lot of these computer vision capabilities, we are collaborating with HyperVerge using HyperVerge's platform. But even internally for basic things like fraud detection of images, whether they're photoshopped or not, the OCR, the document classification, processing the NASH. NASH is a paper-based process in India right now, identifying whether the customer has legitimately signed a physical application form, for which we used to have underwriters earlier, is now being done through computer vision. So the entire document processing stack is, that is one place where we are truly using AI, because you're using deep neural networks to train models on the lakhs of customers we've seen already to make sure that the next 10 lakh customers don't have to go through a physical process. We are starting to use AI in a big way in our customer communication. We obviously had a chatbot which is AI driven, but we are now using machine learning to better predict what are the communication methods preferred on an individual basis. Each customer receives customized communication through a channel that we know that they respond to. The timing, the frequency, everything is driven by AI. We are also investing very heavily into a voice bot, which is an in-house developed voice bot where we are able to answer questions from the customer purely in a using a sound library, but it will be completely bereft of humans, and yet the customer will hopefully go back with a very, very good experience. Then those are the largest pieces where we are using it. And if you have any more points you want to discuss, happy to do that.
I had a follow-up question on this. And because even in our prep, we realized that Kissht, this is a big differentiator with respect to Kissht. So we were discussing about two things. One, things that have now become industry standards, like a whole part of tech now is like something that we expect everyone to do. So what is, the additional 30% or 40% that Kissht is doing, and some parts of what you can share among that?
Correct. So I think there, I would say there are three large differentiators that we as Kissht bring. One of our biggest differentiators is we are able to lend to the customers that most other lenders are either not reaching out to already, or they are basically not on the radar of anyone else. Our alternative credit engine, and just to shed some light on our credit engine, our credit engine does use bureau data, but it is built in such a way that even without bureau data, we are able to assess every single customer. We are able to come out with a conclusive yes or no answer on every customer with even very little data. And that is just coming up on the back of our trained models for underwriting. Now, what that has allowed us to do is that has allowed us to serve a very, very large portion of NTC audience in India. We are able to go deeper into India. We are literally covering the entire geography of India. We actually have customers in Andaman, Nicobar, and Lakshadweep as well. We have some customers in Leh and Ladakh as well. Now, all of that is just purely on the back of a good credit model, which is able to lend even knowing that we might not have the collections presence in some of these places. And the second thing is we are very, very confident that our credit model will perform, and it's a digital tech stack, so we are able to onboard customers. One more differentiator for Kissht is we have actually focused very, very largely on cultivating a repeat behavior, which is you bring in a customer once, you spend the effort to get him onboarded. He does the KYC, he does the auto debit setup. He has gone through the grueling process of filling up, at least what we try to simplify, a very simple form, but he has gone through the process to do that. Once the customer has done that, it is very important for you to make sure that when his first loan is over, he does think of you when he's taking a second loan, and preferably he also chooses you. So we have actually spent a lot of effort on gearing up our repeat models. One is we have a model for determining repeat propensity. What is the propensity for a customer to come back to us? And we also target our communications very specifically. If you are a customer who bought a Samsung phone from us last year, we will very likely pitch you a product that is tangential and you are very likely to transact on. Someone who's bought Carrot Lane jewelry, the next pitch for them will be a Bluestone product or a Carrot Lane product or from one of our jewelry partners. So we do this just in order to keep the customer coming back. It ties also into the experience the customer had with you the first time. So all of it kind of fits. The customer has to have a very good first experience, has to be very happy with Kissht as a product. And then you have to keep engaging with the customer in the right meaningful manner without bombarding him. All of these actually require intelligence. It cannot be done in a non-artificially intelligent manner. It can't be done in a manual manner at the scale at which we are talking about. So this is all where the AI again plays a very, very big role.
Karan, another question connected to the same question is now there are a whole lot of NBFCs who are non-digital who will be looking to become digital. So if they had to, and they don't have large teams, they don't have the experience of using AI for a long time. So if they had to apply AI to maybe the top three areas, where do you see them getting the maximum ROI? New to AI company.
Correct. So any company that is new to AI, number one, and goes without saying, has to be a credit engine. Number two has to be a fraud engine. Hopefully there are separate engines in most places, but credit and fraud definitely benefit the most. It kind of flows downstream from there. You have a good credit and fraud engine, you'll have a better quality of customers, you'll be able to have a good customer experience. A very simplistic example is if you have a good credit engine, you can reduce the documentation required from your customers, leads to lesser manual requirement downstream, and most certainly a better customer experience. So credit and fraud, I would say are one and two. There is most certainly incredible amounts of benefits to using AI in the form of computer vision to process your documents, which is one of the most manual, most painful. Until we went fully digital, we actually used to have a storeroom in our office. We used to call ourselves a Fintech digital player, but we used to still have a storehouse in our office. And we used to pay this one company to take our documents and scan them and return digitized versions. It always was kind of a black spot on this thing, but now things have changed. Now, at least we are 100% digital, but that is one place where you have to invest. Computer vision will actually smoothen out a lot of things. The paperwork, the tax for the customer, and the quality of data that you get back. You get searchable text, indexable text. You can do 1:n lookups with faces, prevent fraud. Again, too many downstream benefits of digitizing your CV stack. And then the third part will be collections. Collections is something where AI does bring in operational benefits. You can decide which of your agents are doing a good job, which ones are not doing a good job, which customers are likely to respond by just calling, which customers likely to respond by just looking at the SMS. All of that allows you to lower your overhead costs. Again, customer experience is paramount, so it leads to a good customer experience. And overall, it makes certain processes tenable. To just give you an example, our typical product size is 25,000 rupees. Now, try to imagine the overheads of underwriting, physical document pickup, collections cost. If you have to call the customer and visit the customers, in a 25,000 loan, it's just not feasible without using the right automation and the right machine learning and the right AI.
And
Understood.
Karan, you have been rewarded on this from both sides. I think on Play Store and all, ratings are absolutely fabulous. So I think the customers have rewarded you for all the hard work, and the investors have rewarded you for investments in this tech also. Right?
Correct. And the customer rating is, I would say the investors, we are obviously very, very grateful to them, but the customer rating is one of the best representations of the work we put in. It's very easy to be able to build a workflow where a customer gets a loan at the end of the day, but doing that and also having customer delight in mind. And customer delight is not a word you will find that easily in the lending in the fintech industry, but for us, it is incredibly important. We have always put customer delight at top of our priorities, and every time, at least I always ensure that I end up taking a loan every few days just to make sure, on an anonymous basis, just to make sure that the customer experience is what I would expect as a customer. Our target segment is a very different target segment. We are looking at people who are taking a loan for a 20,000 product, but the customer experience has to be par none. It has to be what you can expect from any high quality app. And yes, the Play Store ratings do reflect that, and we are very happy about that.
Great. Thank you so much, Karan. You touched upon collections briefly when you were talking about the use of AI in fintech. Most of our audience members today are also asking about and are curious about collections, and rightfully so in this pandemic time. Collection is on the top of mind for everyone. So we have read that Kissht had very early on invested in a collection stack. So wanted to understand from you what the collection stack looks like, and particularly during this pandemic, how it is helping you.
Right. So no, that's again something very, very close to my heart, collections. So we internally at Kissht keep joking that the tech stack we built for collections spun off separately will be probably more valuable than Kissht itself. That's the kind of confidence we have in our collections tech stack. But let me just take a step back. When you look at the collections across the board in India, so before we invested heavily in our own collections tech stack, I actually spent a lot of time looking at how collections is run across India, from the biggest banks to the smallest NBFCs. In India, collections is basically run on Excel and printouts across the board, and there is no exception. You look at the biggest lender, you look at the smallest lender, they all do collections using Excel and printouts. That has a lot of loss in it. So we have actually invested very heavily in our collections tech stack from day one. So roughly on the 10th or the 15th day after we gave our first loan, we had started our independent tech stack for collections. In today's day, I think roughly around 35 to 40% of Kissht team focuses on collections, and not as a response to Corona or anything. It's just the general setup because we understand that underwriting is important, customer experience is paramount, but if you don't do collections right, you won't survive as a company. As simple as that. Now, what we have done in collections is we have built an entire tech stack from the ground up, which is completely driven through a very controlled set of interfaces. Whether it's the interface for the field guy who goes and visits the customer at his home, or our collections scholar, or whoever are the supervisors and the TLs and everything, they all work through an interface. There is absolutely no exchange of Excels or printouts anywhere in the Kissht ecosystem. We have created a specific field app for our agents who go and visit. We've ensured that every single data point around collections is collected in a clean manner, allows us to do a lot of analytics, allows us to do a lot of machine learning to identify what are the next steps. And what we have done is we've created a beautiful analytics pipeline around it. So we are able to predict early on which are the customers, what types of customers need what kind of interventions, what are the kinds of agents. Our agents themselves need intervention. We need to intervene with agents and tell them that, okay, you need to go here, you need to go there. We have built in a form of live tracking on our collections app. So we are able to plan the route for our collections agent also. We don't tell him that you have to go and visit these 5 customers. We tell him you have to go visit these 5 customers in this order because we have optimized the route for you. That is one piece of the puzzle, which is the collections app driving the collections agent. Another piece of the collections puzzle is what we call campaigns. Now, campaigns are these specialized offers, you can say, for customers who are delinquent, but you give them. A lot of our customers are delinquent not by design, they're just there because of certain situations. We completely understand that. We understand that just naturally some of the customers will lose the ability to pay, and we want to ensure that they have a good plan. So we have actually over invested in what we call campaigns. These are a bunch of some 7 or 8 products that are offered to customers depending on the bucket they are in. But we give the customers the option to restructure their EMI. So we have multiple products, such as there is something called as EMI holiday, restructuring, 100% dues waiver, moratorium, snooze, things like that. All of these again presented in a very consumer-friendly process, in a very where you educate the customer what are the benefits, the pros and cons to each. That has also helped collections a lot. Now, again, it looks like table stakes. This is something that pretty much everyone should be offering, but in India, it's not such a common practice. If you look at even Europe and the US, North America, a lot of companies have just sprung up around the idea of collections campaign. There are entire companies that are dedicated to this idea. We have actually decided to build it in-house. All of our customers, as soon as they cross a certain threshold of delinquency, they will start seeing these offers which are suited for the customer itself. That has been one important thing. The overall, the piece that ties everything together, I would call is analytics. Now, with collections, you have massive amounts of data generated. Every single IVR made to the customer generates 2 or 3 data points, whether the customer picked up or not, how long did he listen to, what was the tone of the customer, things like that. Every time we send an SMS, every time we send a push notification, we track whether it was delivered, clicked on by the customer, whether the message had a link that the customer clicked on or not. What you actually need to do is take this massive amount of data that is generated, process it, and determine what is the next intervention for that customer. Even something as simple as determining which language the customer needs to be communicated in collections leads to a 2 or 3% jump in collections. Now, when you're looking at numbers, 2 or 3% can equate to roughly 2 or 3 crores in a matter of 3 months. So, just the use of AI in the right manner is definitely a force multiplier. Now, we have made obviously incremental progress throughout the years. But everything put together brings us to what we call as our collections tech stack, which is an interface for our agents, the options for our customers, and the analytics engine that ties everything together.
Sounds amazing.
That the tech stack itself would be maybe more valuable. So now that there are 10,000 plus NBFCs, and if you have to see the apps on Play Store which actually have a digital experience, complete digital experience, it's very limited. Are there any conversations in those directions where you are looking to take live a whole lot of people with your tech stack?
And so there are challenges. I mean, the challenge, obviously, we would be a biased party if we were to launch as a tech stack. But no, we've always internally joked that maybe we should spin it off as a separate company and have Kissht onboarded as a client. No, but nothing serious so far. These are all what we call chai pe discussions. There's a chai wala below our office where we gather and have all of these discussions. It's one of those conversations, but nothing we have thought through seriously about.
Understood. Karan, so what you've told us so far has been very inspiring and uh, obviously a lot to be proud about. But a bigger question looming in the minds of our audience is, and because a lot of them come from the fintech and lending industry, the times we are in right now look a little tough for the industry, right? And also wanted you to share what are the fintech nightmares that you have as a CTO, and what are the things that you look forward to and are concerned about as a CTO?
Got it. So I think one of the nightmares we are quite presently living through it right now. We always talk about a black swan. If anything, I would call this a double black swan. But this is one of the scenarios that we are always worried about, where a very large percentage of the population loses the ability to pay. But that nightmare is unfolding as we speak, to be honest. But just taking a step back, as a CTO, one of the biggest nightmares is obviously security. That always is always there at the back of my mind. Every night I go to sleep, there has to be a worry that we might get hacked. Some hackers will take our data and either demand a ransom for it or put it on the darknet. It's one of those events that can bring a company down on its knees almost immediately. So security is definitely something that is nightmare fuel for me. It's something we do take very, very seriously, but being an NBFC, we hold a very, very large set of sensitive data. Our customer base is large enough that a leak of that form would be devastating for us and also a lot of problems. So we obviously mitigate that by doubling down on our security aspect. That is one of the nightmare fuels for us. The second thing that always had given us nightmare is the possibility of what we call industrial level fraud, which is in this very, very digital world. You're talking about a place where we are not meeting the customer, we are not visiting, we are relying on digital signatures. We are relying on the lat long that was provided from an Android phone or an API. Not the most difficult thing to spoof. You are looking at Aadhaar cards, photos being OCR'd, which with the right ingenuity, someone can mass produce them and have them match. So one of the things that we obviously always try to mitigate is trying to find a digital process that is at least has some what we call tenterhooks. There are some things that cannot be forced, some things cannot be uh, mitigated for a fraudster, and that is one of the things that we do have to focus on a lot. With a very, very digital process, you run the risk of waking up the next morning and seeing that you've disbursed 100 crores in loans to a bunch of people who don't exist. Now, that is exactly the kind of thing that you don't want to happen. And that is one more thing that does keep me up at night. We've obviously put in a lot of effort to have the right checks and balances so that the process is as digital and seamless, and at the same time not possible for a fraudulent actor or a set of actors to engage in widespread fraud.
Karan, this has been very, very useful. And I think we would move on to audience questions, because I think people have so many questions, and that's the whole idea of this forum.
Super.
And I would request everyone to please post your questions with your name and the organization you're representing, so that it will make it very easy for Deepak and me to start. Deepak, would you want to start with few questions that have already come? Maybe one of the questions that has already come.
Yeah. So one of the first few questions was from Mahavir from Cash Plus, and Mahavir asked that this 3-month moratorium going ahead, A, how does it affect you? B, is it safe to lend in the present situation? And if you decide to lend, what are the particular precautions you will be taking?
Right. So with the moratorium in effect, yes, it does not is not a very good environment to lend. Because I mean, we usually expect customers to start paying EMI the next month. So lending right now with a 3-month moratorium in effect is essentially saying that you are already deferring your EMIs by 3 months. Now, for us to be able to lend right now would mean that we have to charge much higher interest rates or much higher charges to the customer that we are not comfortable doing. So we are at the present not lending in a very meaningful manner. We have reduced our lending largely. Uh, However, whenever we do discuss reopening, one of the challenges that we are facing with reopening is our credit model will definitely not perform as well as we would expect it to. It's been trained on a data based in a different uh, era of sorts. We don't know whether the same credit model is going to perform very well. So whenever we do reopen business, we will obviously take very baby steps. We will first look at a small sample set of customers, look at the data that's coming back from them, retrain our model, and then go live for the large audience. Having said that, one of our key business drivers has been repeat business. Our existing customers coming back to us and taking more loans from us. At least with the right data points, we are aiming to restart business for our repeat customers as soon as we can. I would say within the next 10 or 15 days, we are keen to start our products for our existing customers. But for new customers, it will be a significant amount of time before we are back in operations.
Understood. Thank you. Our next question is from Nitin More from Algorithmo Labs. Nitin asks if you use what kind of alternative data do you use for your credit engine? So things like SMS data, telco data, or do you build your own scores?
No, so when it comes to data, we have what we call the alternative data platform. Now, without going into too many specifics, I can tell you that we are at least tied up with around 60 different vendors of data, 60 different providers of data. First of all of this data is with proper customer consent. In most cases, it's with the right customer authentication as well. So you have a customer who has to authenticate specifically to give you that data. But we get data from a very, very large set of data points. We obviously get data from the usual suspects, which is your PAN database, through the customer provided OKYC. We get the KYC details. Then we get customer can provide optionally his electricity, LPG, driver's license, passport, all of that data. We run all of this data through a model. It just, what it also does, it tries to do what we call data multiplication. It takes data from one source, tries to use that as a query into the next source of data and try to get a higher accuracy. We obviously pull data from the bureaus, which is your Civil, Experian, Equifax. We are tied up with Experian Hunter as well. And in certain cases, we get a lot of data points from the Android itself, Android phones or the smartphones, the customer themselves. Again, with very, very clear customer consent, where the customer is very clear on what he's providing, 100% transparency. All of the data that we get is processed algorithmically. Nobody in the company, including myself, can actually look at the data in the raw form. And this data is used to form what we call an alternative score. And that is the score that we use to assess our customers. In a nutshell, yes, we use a lot of data from the Android smartphones as well, but we get a large swath of data from a lot of different sources.
Understood. Understood. That is very useful to know, Karan. So Saurabh Malhotra from Hora.ai is asking if during a pandemic and following social distancing, obviously physical collections must be a challenge.
Right.
So how has collections process been affected in social distancing norms?
Got it. No, so collections in the time of Corona looks very, very, very different from what it used to look earlier. We are not doing home visits at all. There is no physical collections. There are no home visits at all. In fact, what we did at the very start of the lockdown, one of the very first things we did is we took our entire collections telecalling setup, which is basically one of the few pieces in Kissht where we own the infrastructure because it requires telephone connections, SIP trunks, and server to make calls. We actually took our auto dialer and converted it into a collections app, an auto dialing app which can just work from the SIM card. And we are using cloud telephony, which is basically where what Uber and Ola used to communicate between the driver and the customer. So our entire collections calling team is now working from home. Our collections field team has now essentially become our collections calling team. They're also working from home, and what they were doing in visits, they are doing it over a phone call. And at the same time, there is a much higher sensitivity on collections, right? You are looking at customers who are not going through the best of times, and you can't do collections as usual. So we've tried to change the entire angle of collections from being a collection calling a reminder to pay to basically to check up on the customer and see whether he's going to be able to pay or not. If he's not going to be able to pay, give him all of his options, reach out to a customer, set a good tone, set the right expectations, and tell them what are all the options, so that even if they want to come back and pay 3 months later, 5 months later, we want to have them rest assured that we will make sure that the journey is as painless as possible for them. So collections, what it looked like 3 months ago, and collections, what it looks like right now, is they are just two different worlds.
Understood.
Karan, very happy to know from you about this, because recently, all of us are reading reports about how customers are getting harassed. I think it is because of teams not adjusting to the new reality, right? That this is the new reality, and if you try to collect the same way that you were doing before and try to become more and more forceful, it's not something that's going to help in this time.
Oh, that is never going to help. I mean, you are probably talking to customers who genuinely don't have the ability to pay. Some amount of calling and reminders is not going to change that for the customer. And we actually have models that tell us which customer, if he would have had the ability to pay, would have already paid. So we are looking at a customer where we are certain, almost certain, that his customer is not paying simply because he does not have the ability to pay, not that he doesn't have the intention to pay. To this customer, if you talk in anything other than a courteous or a polite manner, it is doing you more damage than it can possibly do you any good. That is a philosophy, and you are right. It's difficult also when you have a very remote calling team. You can't have the kind of quality control in place. But when we launched our collections app, the app for calling, actually the first thing we put in place was the quality control measure. So we have an audit system just to make sure that even if they're not on premise, we at least are adhering to the same quality of customer support that we would otherwise also. We actually use something called as tone detection and keyword detection, just to make sure that none of our callers are going off script or are using a tone where they should not be using when talking to any of our customers.
That's very heartening to know, Karan.
So Rohit from Vastu Housing Finance asks us about the various offers you give to your customer and campaigns you run when you start sensing delinquency, right? Given this lockdown and the regulations by the RBI, how has that approach changed? And the recent provisions by the RBI, what do you see what do you see the effects on the business and especially the collections part because of that?
No, look, there has been some amount of confusion and chaos in the consumer's mind because of the RBI guidelines on moratorium. Although they were very, very clear on what is allowed and what is not allowed, for the normal consumer to process the difference between a bank and an NBFC, what rules apply to a bank, what rules apply to an NBFC, is not very, very, very easy. Can't expect a customer to do that. Having said that, that onus has shifted to us as NBFCs, as players in the lending industry. We have to make sure that we educate the customer. We are offering moratorium to all of our customers. At the same time, we want to make sure they understand what it means. It does not, moratorium does not simply mean a 3-month EMI interest-free period. It just means you're pushing your EMIs out, but also increasing your interest load. We actually offer better products than that. Some of our products are much better for the better for the customer. So we have a product called Snooze, which just pushes you out for a smaller upfront payment, but the overall load that you bear is much lower than a moratorium. Our thesis with that is, because the customer and the upfront amount is a minuscule amount. You're talking about 50 to 100 rupees. It's just for us. It's a promise by the customer to pay later on, but we use that token as a goodwill gesture from the customer, and we ensure that we waive off the interest during the period that we are pushing it out by. So we have products even better than moratorium. So we want to ensure that our customers understand that product. It's not that simple. When you have some 2-3 different collections product, the hardest part is making sure the customer understands what each product means, what are the fine print, as well as what are the benefits. And that is again where a good product design comes into play, where we've put in a lot of effort, not just to build the collection products, the collection campaigns as we call it, but make sure that it's understandable to the customer. The RBI moratorium is another product that we were required to launch just to offer it to the customers. But even before that, we actually had a bunch of seamless options for the customers.
Understood. So Naeem from Jakarta has asked us, while you have automated a lot of processes like IVR, email, confirmation reminders, etc., how interactive are they for the customer? And I think what Naeem is trying to ask is how human-less have you made this entire process? So if you could give us an idea of that.
All right. No. So I mean, let me take it in two parts. There is the part we want to get to and the part where we are right now. I will broadly talk about the part where we are right now. With almost all communication to the customer, whether it is through the form of interactive IVRs, SMS, push notifications, in-app notifications, your WhatsApp and everything, you want the interaction with the customer to be literally binary. Whether the customer responds in a yes or in a no, or the third option is the customer has not even looked at the communication. But you have to ensure that your customer is literally that simple. If you try to make more complicated workflows around that, you will lose some of the benefits of that. So in most of our communication, we give, usually if it's a payment related this thing or an application related, we just give them a simple link where they can go and complete their application or go and make the payment. And the only data point we look at is whether the message was delivered to the customer or the notification was delivered to the customer, and whether the customer clicked on it, which is a yes or no binary. That is how simple we have to keep the communication.
Absolutely. So Ashik from Truecaller India has asked us, in the times of COVID, how are risk models changing? So we have an understanding, obviously, that a lot of risk models we need to be fine-tuned. What are the extra considerations that you think, and of course, without revealing too much about your secret sauce, would like to share with the audience?
Yeah, I mean, I wish for this answer we had a secret sauce right now. To be very frank, we are not certain ourselves how the risk models are going to change. The only one thing I can tell you is our risk models are completely data driven. So there is no thesis we need to apply. We will literally just have to do a pilot, look at the data that comes out of it, feed it back into our models, retrain our models, and the model will itself tell us. But if there is a secret sauce, if anyone knows of, we are very, very happy to hear the same. But no, how Corona is going to change payment behavior after the lockdown is over and how when the economy is back to normal is anybody's guess. But we are just literally going to rely blindly on the data that comes out of it.
Karan, an honest admission like that coming from a CTO like you is very encouraging for most of us here in the session. So really appreciate the frankness there.
Thanks, Deepak.
But Karan, one thing that would stand out is definitely that you're, you having an alternate way to also, onboard a customer, which doesn't depend upon, what the bureau is telling you. I think that investment is now more and more valuable, right? Because bureaus cannot give you data through this time because, scores are not affected because of moratorium and all of that.
Correct. No, absolutely. In fact, bureaus will not be able to capture the dynamicity that has happened in the last 3 months. They will not be able to capture the complexity. Bureaus were also largely paired with your traditional income assessment mechanisms, where you look at the bureau score, you look at the customer's bank statement to determine what his income is. We've never done bank statement verification, and bureau data is going to be increasingly more unreliable and not a true indicator. So all of our efforts into building our NTC scorecard, as we call it, or alternate model to assess customers, is going to reap the benefits. And that's what I'm saying. For us, while we don't have a model for the post-corona world, at least we have a path to the answer for that. The path is very simple. We just simply have to do a pilot with a X number of customers, and then the data itself will show us the way. That is the approach that you cannot have when you are relying 100% on bureaus.
Karan, for our next question, Ashik has another question that says, how has your customer profile changed since this pandemic begun? And I think a follow-up on that would also be, what are the new customer behaviors that are emerging because of this pandemic? And while you answer that question, I thought it would be really relevant to pull up this slide that you had shared with us about the coverage of a digital platform like Kissht, right?
Right.
Given that you have exposure to such a huge diversity and penetration in the Indian population base, what kind of emerging behaviors and changing customer profiles are you seeing?
Again, to be frank, the change in customer behavior post-corona is something that is yet to be seen. One of the benefits that has come with a very, very digital outreach, this map is a very good representation. Just for everyone's context, each dot represents one loan. Unfortunately, the data could not be plotted as towers because the library I was using was crashing. So I had to represent as a flat graph of data points. But one of the things that I like to capture with this image is that we are able to service customers literally across India. There are no geographic boundaries. There are customers that we have in Lakshadweep and Andamans. This is for a company of Kissht size. We are not a very large company by any banking or NBFC standards. For us to be able to cater to customers all across India in a completely encompassing manner is only possible from the power of a digital workflow. If you don't have a digital workflow, if you have to rely on an agent going and visiting and collecting a document or doing KYC, oh boy, you can't do this. That's not possible. So we have to do that. Another interesting, I think, the graph that you've shown, the zoomed in image, we are actually able to plot and decipher geography. So we are able to identify where are the cities in India and where are the roads in India just by looking at the data points that we are able to plot on a map. And the first time I saw this photo, I was like, boy, wow, that is incredible. We are literally all across India. Just purely the power of, I would say, a digital process, incredible initiatives from the government. Without the India stack, without Aadhaar, without UPI, without digital locker, this was not possible. So as much credit as we would like to take for creating a digital process, had it not been for the right governmental initiatives and for partners like HyperVerge, it would not have been possible. So this is just the culmination of all the right factors coming in, allowing us to uh, be present all across India.
That is extremely exciting to watch what a digital platform can do when traditional NBFC cannot.
Yes.
Interesting question about willful defaulters, Karan. What are the recovery methods from them? And I would like to assume that you would try to weed them out in the beginning itself, right? To have a strong recovery barrier. And if you could throw a little more light on that.
No, so I mean, like you actually answered, for us, willful defaulters is a much lower problem that you would see in most of the cases. I would give large credit to our credit engine and fraud engine. I mean, there's no denying the fact that that has been the case for the last 2 years. In the first 1 or 2 years of our inceptions, we did see those customers while our models were getting to maturity. Uh, so with willful defaulters, the best approach is to have the right credit and fraud engine to make sure that the incidences of willful defaulters are very, very low. The other challenge is there is, other than retrospective data 2 years out, there is no way to determine which one is a willful defaulter and which one is a customer who genuinely lost the ability to pay. Having said that, at least we follow our standard processes across all of our customers. There is the right set of interventions over push communication by just sending them SMSs and notifications. There is a stage where we do call the customer, and in very extreme cases, we also do visit the customer at their house as a reminder. But for willful defaulters, we at least don't have a specialized process or a mechanism in place. They are just treated like any other customer who's lost the ability to pay.
Understood. I think we're reaching the end of the pile of questions. So just wanted to point out to the audience that, if we have around 2 to 3 minutes more, so we might be able to take maybe just one more question.
Sure.
And also wanted to point out that we will be compiling Karan's responses into a blog and a video that will be circulated with everyone, just so that we can reconsume it later, because I'm sure a lot of valuable insights at least personally, I know a lot of valuable insights have been shared by Karan. So thank you so much, Karan, for that. We will maybe take one more question. And I think that question can be slightly technical, which is coming from Rohit from Vastu Housing. Given that e-signs are becoming prevalent now and also will be a norm for a long time now, uh, what has your experience been about the enforceability in court in case of defaults, etc., for e-signs?
No, that's a very, very good question, actually. Now, I'll tell you the challenge with eSign is eSign has been around for a good part of 1 year. We have been convinced in the power of eSign ourselves, Kissht as a company. But most of our banking partners, although there is very, very clear cut, there is black and white regulation that eSign is exactly as valid as a physical wet sign. The right eSign, which I'm talking about, the CCA powered e-sign, which is using Aadhaar and KYC. Uh, that is 100% enforceable in the court of law. As per the regulation, it is absolutely no different from a physical sign. Now, when you talk to other partners in the industry, in the lending industry, in the banking industry, the first thing they tell me, they come up with, is that if we ever have to file an FIR against the customer, when we go to the police station and tell them that there is a customer who's taking the loan, the first thing they ask is, show me the application form of the loan. Now, try explaining to them that there is no application form, but there is this e-signed PDF. And the way you can determine the authenticity is you have to take the PDF, extract the signature, and verify the hash of the signature to make sure that it's a legitimately signed e-sign, and that is how you know it's a signed PDF. Uh, Try explaining that to police personnel, and then that is where you come across with that although it is 100% enforceable in the court of law, it is a legal document. At the right levels, it will get validated, but there are a lot of challenges in India. It's for us, it's a challenge to even convince our partners. You are talking about uh, leading digital fintechs and NBFCs, and we have to convince them that e-sign is allowed, but we still struggle with it. So the legality of it is without a doubt 100% legitimate. There are real world implications of using e-sign, which is a mentality change that will have to come across in India. So some of the mentality shifts in India have come very quickly. Aadhaar as eKYC, using of UPI for the audience has come very, very quickly. The acceptance of e-sign, I think, will take some amount of time.
Wow, I would not have imagined this challenge. That the law enforcement not being aware about how e-signs work would be a major bottleneck in using them.
And just to be clear, I don't blame them at all. I mean, there is a part of government issuing a directive saying that, okay, this is e-sign, this is the definition of e-sign, this e-sign is legally valid. But then there is a part around having to train the people who are going to deal with it, who are going to interact with it. So there needs to be a top-down communication uh, on what are the benefits of e-sign and how it's enforceable. But I mean, I don't blame the police personnel at all. It took me a certain amount of time to get around to what's the validity, to do the legal research, to get to a confidence that no, it's 100% legal in the court of law. For a police officer whose job is not to decipher SHA-256 hashes, I can't expect him to do that.
COVID may just accelerate all of this.
Let's hope so.
Great. Karan, I want to just take this opportunity to acknowledge the members that we have today from the community in this call. So I'm just going to pull up a slide that has details of all the people who are present in this session. As we come to a close of this session, I would like to thank all of you for your time. We are reaching the end of the session. I think for sure a lot of valuable insights have been shared today. And thank you so much, Karan, for sharing these insights. I hope you will continue to be a part of this forum as we go ahead. And I hope that our audience will also would have found a good, valuable time today and will continue to be with us in the future as well. So on that note, Karan, Kedar, both, thank you so much for being here. Audience members, thank you so much for being here and asking your questions. We officially bring this webinar to a close. Looking forward to have you again in the future. Before we close, please just take a quick survey to tell us how your experience was during this webinar and how we can improve it in the future.
Thanks a lot, Deepak. Thanks, Kedar. Thanks, everyone in the audience. Very happy to be here and a fantastic experience, Deepak and Kedar.
Karan, you continue to rate 4+ on all platforms, I would say. So even our interaction today is very highly rated. So thanks a lot for all your insights.
All right. Thanks, Kedar.
Thank you. See you next time.
All right.
you.